Good day, all. Welcome to another episode of Accounting with Felix Sunday. This episode, we shall be looking at past questions as a follow-up on what we did last episode. In last episode, we treated the business transaction, and we said the business transaction can be defined as the interaction between a business entity and its customer or its supplier or any other party with whom it carries on business activity. We further define transaction as the exchange of goods or services for a consideration between an entity and its customer, supplier, or any other party with whom it carries on business activity. From that definition, we could find the word consideration. The word consideration means the value given or paid for the service or the goods received in exchange. That is, what you pay or the value you give is called consideration. And this consideration came in three forms. That is, you can pay consideration in a transaction in three ways. One, cash consideration. Cash consideration. Number two, deferred consideration. And number three, we call it barter consideration. The cash consideration is when you pay cash, check, or you transfer for such substance you receive immediately. We call that cash consideration. Where the deferred consideration is when you defer the payment to the future. We also call that credit transaction, where you don't pay immediately, the payment is deferred into the future. We also have the barter consideration. This is the barter system, the trade and barter system, where you don't pay with cash or check or transfer. Rather, you pay goods for goods, service for service, or you pay service with goods. This is barter. So these are the three considerations we can use in a business transaction. We also went on to discuss types of business transaction. Here we also have three types of business transaction. The first one is the simple and complex. Simple and complex transaction. The second one is the one-off and ongoing transaction. But the third one is the capital and revenue transaction. We discussed these three types of transaction in our last class. Focus will be centered on the capital and revenue transaction because that is where the examiner usually tests questions from. Like I said, today we're looking at two dates I can pass question. The first date will be November 2014, question number 4A, and second will be May 2016, question number 6A. Before we treat those questions, let me explain what capital and revenue transaction means. Capital transaction has to do with such transaction that the entity derives long-term economic benefit from. Such transaction that is a long-term in nature, such as purchase of motor vehicle, purchase of land, purchase of building, money received from owners of the business as in form of capital, loan received from the bank into the business. These have long-term effect on the business. As such, they are classified as capital transaction. And we also said that capital transactions are usually recorded in the statement of financial position because they are long-term in nature. Now let's look at revenue transaction. Revenue transactions are transactions that are of short-term economic benefit in nature, where the entity derives short-term economic benefit from. in such transaction. These transactions are usually recorded in the statement of profit or loss. Example of such transaction includes number one, sales of goods. Number two, rent paid or rent received. Number three, salary paid. These transactions happen on a day-to-day basis, and as such, they have short-term economic benefits and are usually recorded in the statement of profit or loss. These transactions can also be classified into two, namely capital and revenue expenditure and capital received and revenue income. Thus, capital and revenue transactions split into two. The first one is capital expenditure and revenue expenditure. Second one is capital receipt and revenue income. These are the further classification of capital transaction. This can be classified as capital expenditure and revenue expenditure, capital receipts and revenue income. The capital expenditure is an outflow. Money is going out, payment is being made, expenditure is being incurred, money is going out. While the capital receipt and revenue income, money is coming in. The entity is receiving inflow of cash. Therefore, they have different treatments. While this money being expended, this money being received into the entity. Let's explain capital expenditure to start with. The capital expenditure can be explained, is referred to as expenditure incurred for the purchase or acquisition of long-term asset. Expenditure incurred for the purchase or acquisition of long-term assets. And these are recorded in the statement of financial position. Let it be noted. It should be noted that the process of recording an item of expenditure in the statement of financial position is called capitalization. Capitalization. That is, to recognize an item of costs as an asset in the statement of financial position is regarded as capitalization. So when an item of asset is acquired, when an item of plant and equipment, item of furniture, motor vehicle are acquired or purchased, we call that capital expenditure. And this has long-term benefits to the entity, and as such, they were recorded in the statement of financial position. Then we now come to revenue expenditure. These are expenditure on day-to-day activities of the business. Expenditure that we carry on daily, weekly, monthly, or annually. And as such, they have short-term economic benefit to the entity. They are recorded in the statement of profit or loss for the entity. This example includes rent paid, salary paid, payment for repairs, payments for subscription, payment for any payment for purchase of raw material. All payments that are made of short-term benefit are called revenue expenditure, and they are recorded in your statement of profit or loss. We have dealt with the aspect of outflow of cash, payments, expenditure. Let's look at the other aspect, which has to do with receipts, money coming into the organization. And this can come in two ways, either for the short time or for a long time. The long term has to do with capital receipt. Capital receipt is the inflow of cash to an entity that has long-term economic benefit to the entity. Receipt of cash, receipt of money into a business entity that has a long-term economic benefit to the entity. Example of such include loan obtained from the bank that could last for years. That loan obtained is an inflow to the entity, and the loan will be used to finance the business activity for a long term, and that is why it is called capital receipts. Also, the money introduced into the business by the owners of the business. This money is coming in to finance the business activity. Although from the owner, it is called capital. Money introduced into the business by the owner of the business is called capital. That money will remain in the business as long as the business exists, and as such is classified as capital receipts and will be recorded in the statement of financial position. On the other hand, we have the revenue income. The revenue income has to do with day-to-day income that accrues to the business organization. Day-to-day income that comes in form of sales of goods, revenue, in form of dividend received, in form of rental income received, in form of interest received, in form of commission received. All these are income, all these are receipts, but we call them revenue income. And they are all recorded in the statement of profit or loss of the entity. This is where I can mostly set this question from, to differentiate between capital and revenue transaction. Sometimes it can trickle it down to capital and revenue expenditure, as it was asked in this years we'll be considering now. So let's look at ICANN question November date 2014, question number 4A. First of all, start with understanding the examiner's requirements. By doing that, you have to go and read what the examiner requires of you before you can answer this question. It says, A, state which of the following items should be classified as capital expenditure for the purpose of preparing statement of financial position. In this case, the examiner is being specific. He's not asking you to state which is capital expenditure and which is revenue expenditure. It's only asked you to identify from the list of expenditure given to you. You should identify which one qualifies to be a capital expenditure only. So you must understand the examiner's requirements so they can answer the question appropriately. Don't go beyond what the examiner requires of you. Now, I take it again. It said to state which of the following items should be classified as capital expenditure for the purpose of preparing statement of financial position. Like I told you earlier, that capital expenditure or capital transactions are usually recorded where? In the statement of financial position. That's what it's asking you now. Now, this is the list given to you. Number one, purchase of leasehold property, premises. You have to classify it. Is it capital or revenue? Number two, annual depreciation of leasehold premises. Number three, solicitor's fee in connection with the purchase of leasehold premises. Number four, the cost of adding extra storage capacity to a mainframe computer used by the business. Number five, computer repairs and maintenance costs. Number six, profit for the sale of an office building. Number seven, revenue from sale via credit card. Number eight, costs of new machinery procured. Number nine, custom duty charge on machinery procured and imported into the country. Number 10, the carriage cost of transporting new machinery from the supplier's factory to the buyer's premises. Number 11, the wages of the machine operator. Number 12, cost of cleaning of the machine room. Finally, number 13, costs of oil and other materials purchased for the repair of the machine. We will take them one by one after the other. But before then, I must make some clarification here. There are some costs that are incurred on an asset. Some have to be capitalized, some have to be expensed. How do you know which of the costs should be capitalized and which cost should be expensed? I've explained to you earlier on what capitalization means. It is to record or recognize a cost as an asset in the statement of financial position. Now, for an asset, when you incur additional cost on an asset, some are qualified to be capitalized, some are to be expensed in the statement of profit or loss. There are four criteria you must consider before you capitalize such subsequent expenditure. Number one, if such costs are incurred initially when the asset is yet to be put to use, capitalize all the costs. If such costs are incurred directly relating to the acquisition of the assets before it is put to use, capitalize it. Number two, where such costs incurred after the asset has been put to use, where such costs incurred after the asset has been put to use, and such costs which achieve these four criteria. One, where such costs will increase the lifespan of the assets, capitalize it. Number two, where such costs will increase the economic benefits from the assets, capitalize it. Number three, where such costs will improve the efficiency and capacity of the asset, capitalize it. Number four, where such costs will reduce the maintenance cost of the asset, capitalize it. So where these four costs are incurred after the asset has been put to use, you must capitalize it. On the other hand, where the asset has not been put to use at all and other costs are incurred, the asset is newly bought. Every other cost incurred that are directly relating to the asset, such costs must be capitalized. Let's take them one by one. The first one says the purchase of leasehold premises. Should that be capitalized or it should be expensed? Listen, we are looking at items that should be capitalized now. Let's say here, capitalization of costs. The first one we have here is the purchase of leasehold premises. I put it to you. Should we capitalize that or we should expense it? It should be capitalized, the purchase of leasehold premises. Why? Because that cost incurred, we enjoy it for a long time. Therefore, when I say purchase of leasehold premises should be capitalized. Then look at number two. They said the annual depreciation of leasehold premises. From that word, annual, short-term benefits, it should not be capitalized. It should be what? Expensed. In such case, it will not come under here. We leave that out. Look at the third one. This is solicitor's fee in connection with the purchase of leasehold premises. I told you when such cost is directly related to the assets, it must be capitalized. This cost was incurred when the asset is being procured. It has not been put to use then, it is just been procured. And this cost is directly related to that asset. Therefore, it should be capitalized. It is the solicitor's fee in connection with the procurement of the leasehold property. Solicitors fee in connection to the leasehold premises should be capitalized. Then the next one Number four, the cost of adding extra storage capacity to the mainframe computer used by the business. This is not a new one. It has been in existence, but in this case, it is being expanded. The capacity is being expanded. And these costs fall under those four I gave to you. That is increasing the capacity, the efficiency of the equipment. Such costs incurred must be capitalized. Therefore, now say the cost of adding extra storage. That's number three here. Cost of adding extra storage capacity, capacity, capacity to a mainframe computer. That should be capitalized. Then the next one here is the computer repair and maintenance costs. Computer repair and maintenance costs. This happens frequently, say annually or as the case may be. So because of that short term, it will be expense, it will not be capitalized because it is done frequently. It is under revenue expenditure. The next one, profit on the sale of an office building. Profits is treated in the statement of profit or loss. As such, this is not qualified to be capitalized. The next one, revenue from sale of credit card revenue is a revenue expenditure, revenue item that will be treated in the statement of profit or loss. As such, it should not be capitalized. The next one, cost of new machinery procured. Cost of new machinery procured. Should this be capitalized or expensed? Of course, it should be capitalized because the benefit of that machine that was procured will be enjoyed for a long time. Let's say number four, costs of new machinery procured. Then the next one is custom duty charged on machinery procured and imported into the country. I put that to you. Custom duty for the purchase of a machinery. Should we capitalize it or we should expense it? Of course, it should be capitalized because that cost is directly related to that machinery being purchased. It has not been put to use, it is being purchased. So that custom duty is part of the cost expended to get that machine to its present location and condition. As such, it should be capitalized. We call it custom duty. Custom duty on machinery. On machinery. That should be capitalized as well, okay? Then the next one, the carriage cost of transporting new machinery from the supplier's factory to the buyer's premises. Carriage costs, also called transportation costs, of carrying that machine to its present location and condition. Such items, such costs should be capitalized. It should form part of the cost of the asset, part of the cost of the machine. And I call it carriage costs. Okay, then the next one is wages of the machine operator. The machine operator, without he working on the machine is useless, cannot work. Therefore, one will argue that that cost should be capitalized because without the machine operator, the machine cannot be used, cannot work. That argument is proved to be wrong because that machine operator cannot be controlled. He can resign, anything can happen to him. So the definition of what constitutes an asset is that an asset can be defined as a present resource controlled by an entity as a result of past event for which a economic benefit is expected to flow to the entity. So any cost that cannot be controlled by the entity should not be capitalized, should not be taken as cost of the asset. Therefore, these wages should not be capitalized. That's number one. Number two, the wages are also a short-term payment, either daily, monthly, or annually. As such, should be classified as revenue expenditure. That is one other reason why it should not be capitalized, rather it should be expensed. That will not come in here. The next one, the cost of cleaning the machine room. This one also is a revenue expenditure that is done, that is paid for every day, every month, or every year. Should not be capitalized. The last one here now is cost of oil and other materials purchased for the repair of the machine. This is a regular maintenance cost, regular cost incurred to maintain the machine. So with this list given to us, out of those 13 items, only 6 are qualified to be capitalized in this question. And when you answer this question, I think the mark allotted for this question is 6 mark. Let's look at the next diet. ICANN May 2016, question number 6A. The question says, for each of the above, state whether it is a revenue or capital expenditure. Now you are to determine which one is falling under capital, which one should fall under revenue from the list given to you. I take them one by one. Given below are the items of revenue and capital expenditure. A, 1. A number of new cars that had recently been cleared by a motor car dealing company. B, 2. 2 new motorboats acquired by a ferry service agency. 3. Vacant houses owned by an estate developing company in respect of which negotiations are ongoing for assistance for their sale to prospective landlords. 4. New buildings acquired for the purpose of holding the items of plant and machinery belonging to the discharging manufacturing company. 5. Cost of acquiring a leasehold property for office use. 6. Granite purchased by an engineering contractor for use at a construction site. 7. Cost of rehabilitating a dilapidated housing unit owned by an estate developer. Repairs, number 8 now, repairs of plant and machinery in a manufacturing company. Let's take them one after the other. This is May 2016, question number 6A. It should be capital expenditure and revenue expenditure. Number 1. Let's pick number 1. They said a number of new cars that have recently been cleared by a motor car dealing company. When you look at that transaction, one could easily say it is a capital expenditure because you see a car there. The car benefit will extend for a long time, but however, that car is not for the use of that entity. It is for a sale. As such, that car should be classified as inventory, not as a non-current asset to be capitalized. Therefore, it should be expensed. So, number of new cars, number of new cars, numbers of new cars by a motor dealer. It's a motor dealer. He sells cars. Those cars are not for use, they are for sale. Therefore, those cars are like goods to him. They are like inventory to him, which he sells. They are not assets that he uses. So it should be expensed, not to be capitalized. 2 new motorboats acquired by a ferry service agency. The ferry service agency are acquiring this new boat for use for their business and not for resale. As such, it's an asset to them that they will enjoy for a long time. Therefore, capitalize it as new two motorboats, new two motorboats to be capitalized. The next one, vacant house is owned by an estate developer company in respect of which negotiation is ongoing for the assistance for their resale, for their sale. This one also it should be expensed. Should be expensed. Vacant houses, vacant houses for sale should be expensed. Then the next one, new building acquired for the purpose of holding new items of plant and machinery. These buildings are for use of the business and they will last for a long time. Therefore, you bring it here as what? New building for use by the business. The next one, which is costs of acquiring a leasehold property for office use. This should be capitalized. You come here, you say 3. Costs of acquiring a leasehold property. Leasehold property. You capitalize. And the next one, granite purchased by an engineering contractor for use at the construction site. Those granite purchase, he is constructing it for somebody, not for his own use. As such, it is like an inventory to him, and it's going to be classified here as 3. Costs of granite, okay, by a contractor to be expensed. Then the next one, cost of rehabilitating a dilapidated housing unit owned by an estate developer. Now, this cost is incurred to improve an already existing building. This cost will either increase the lifespan or increase the capacity or increase the efficiency. As such, it should be capitalized. 4. Number 4 is cost of rehabilitation. Cost of rehabilitation of building. And the last one here, repairs of plant and machinery in a manufacturing company. Although the plant and machinery are long-term assets, however, the repair of it are done regularly, as such should be expensed. For costs of repairs and maintenance. So this is how you treat capital expenditure and current and revenue expenditure. By God's grace, subsequently we'll take other topic and try your hand on other icon questions and see that this topic will guide you on how to solve them. Thank you. God bless you.